In this video, I want to talk about something really important. Now, you watch my channel because I share my investing knowledge, but in reality, investing knowledge is only half of what investing really is. So on my channel so far, I've showed you my portfolio picks, I've showed you my entire portfolio, my retirement portfolio. I share what I've learned in the last 10 years as an investor, building a net worth in the multi-millions, just in the stock market. Now, my perspective on specific stocks, my allocation, the opportunities, Elon's tweets, all that stuff sounds great, but I haven't gone deep into something that's just as important. In fact, it's probably more important than all that stuff that I've just talked about. And once you hear it, you're gonna know it's true. So what is it? It's your psychology. It's your emotions. It's the after effects of your evolutionary biology, which can destroy the smartest investors. Now, in this video, I'm gonna dive into some of the fallacies that I've seen friends, family, or just people I know fall into these pitfalls and lose thousands, hundreds of thousands or more, and do it over and over again. It's painful to watch. Hopefully this helps you avoid those same issues. Now, financial knowledge, you can kind of think of it like this. What your knowledge allows you to do is it allows you to see what the right path is. Right? It allows you to kind of open the doors of opportunity. It gives you educated chances to basically limit your risk and create massive gains over time. With the right financial knowledge, basically anyone can be rich with enough time, right? Even working a regular job, you can be rich with enough time. But here's the thing, knowledge is not everything, all right? In fact, knowledge can be literally worthless. It can be nothing, because without the control of your emotions, you can easily destroy your future. You can easily destroy all the potential that you have, literally like this. It's pretty insane how you can just make one over-leveraged bet in the wrong thing and be done. Now, knowledge gives you the ability to make the right decisions, the ability, right? But it's your psychology that ultimately decides if you take the right actions. And all the time, people mess up their lives even though they know better. Now, this idea transcends the stock market. I want you to think about investing, and maybe even from this channel, think about investing as like, there's different areas in your life you can invest in, right? It's not just stocks and real estate. Those aren't the only assets to life. Like, let's talk about relationships, right? People stay in shitty relationships even though they know better because it's maybe comfortable. They don't improve their resumes and strive for better jobs even though they know they should, right? People don't have hard conversations because they don't want the confrontation, right? And this happens over and over again. And the thing is, they want to do those things because they think that those things would actually give them benefits if they did the things that are hard, but they still don't do it. And it's because emotions are powerful, right? Emotions are a danger to ourselves and our potential. It's something wired in us. Genetically, it's not here to help us, all right? So in this video, I'm gonna try to give you some lessons I've learned to control my emotions as an investor specifically. And we're gonna go through 4 different things that I think are vital for you to pay attention. So please just watch this video, even though you know, I get it, buy when there's panic in the streets. We're gonna go a little bit deeper than that. So here's the first thing I want to make sure you realize is that your emotions are not your friend, right? In fact, they're your enemy. All right, we happen to be hardwired to do the opposite of what we should when it comes to the market. So literally, for most cases, if you're brand new to investing, if someone's brand new, you take them off the street and you say, hey, what do you think you should do in this scenario? Basically, what they should do is the opposite of what they feel like they should do. Literally, if you do the opposite to what your emotions tell you in the stock market, you're actually probably gonna end up better off. So here's the rundown, right? When stocks go up and people are yelling, to the moon, and it makes you feel so exciting, and Dogecoin is about to be on SNL, and Elon's gonna pump everything. That's when people feel FOMO, they buy in, they think the stock, the coin is amazing, it's great, but in reality, you gotta realize that people have already bought in. It's been pumped up. Instead of thinking that it's a great investment, you should think about it being an expensive investment because the price has gone up, right? Now, what happens when things go down, right? Everyone yells, this is the worst stock ever, run, this is terrible, the stock is terrible, the price keeps going down, and people want to sell at the lows, right? When instead, they should realize that it's been highly sold off by people. And as long as the company or the long-term fundamentals are the same and they're still as promising, that stock is not bad. That stock is cheap. Prices are on sale. So prices can go down, right, when there are massive realizations that the company isn't as great as expected, say Nikola, right? But most times in the short term price is driven by some news event, some headline, some rumor, right? And so you got to approach those things, those downturns, and ask yourself if the changes that you're seeing, if that changes the fundamentals of the company. And now if it doesn't, and it's just short term, like a short term lawsuit, like let's say Peloton, for example, then things can maybe rebound much quicker. So you want to make sure that you invest in companies that you have a long-term vision for, right? It's very hard to see the short term. So when their CEO goes on Joe Rogan and talks about his plans for the future and blows everyone's mind, but happens to take one hit of weed after saying he doesn't do it, he just very rarely smokes, when there's a sell-off, maybe it's a bit exaggerated, right? So before I go any further, please let me know if this psychology of investing is interesting to you by clicking like. That's the only way that I'm going to know that you value this kind of information. And so go ahead, click like if you like this content. Now, the second thing is that our reality is what we see around us. That's what makes our reality. So the news is a big driver of our markets, just like it's a big driver of our minds. Remember, our reality, our literal reality, is based 100% on what we believe it is, right? On what we see, on what we consume. That's our reality. That's it. If you change your beliefs, if you change the stories you tell yourselves about the events or things that have happened to you, then your reality changes, right? When everyone is screaming that the crash is coming, take out everything, sell it all, go all in cash, and they're doing that over, and they're saying that for months. Go all in gold, go all in silver, this is it, this is the end. The more people say that, right, the more it's all over the news, the more people will believe it, and guess what? It's already been factored into the market. You can't have a crash when everyone thinks there's a crash coming. Why? Because everyone has already sold. They've already driven the price down. There's already some support in the markets. It's leaner. It's not artificially high. In fact, maybe it's artificially low. So the more people that think there's a crash, to me, my psychology tells me now that I've trained myself, I go, you know what? Things are safer. And the more people that think there's a crash, the safer I feel. The danger is when no one sees it coming, right? Like the Great Recession, right? How there's no way that real estate prices can go down. How can real estate do that? It's the safest investment ever, right? What did that do? Well, it artificially heightened everything and everything got over leveraged, and that's the issue. So that's what I think of, right? When people don't see it coming, that's when it comes, because no one's factored it in. The price of the market hasn't factored it in. There's a lot of fat in the market. Everything's kind of artificially high. And I don't know about you, but in February of last year, right before the pandemic crash, pretty much everyone around me was joking about this Chinese virus. Just joking about it, right? And that was not good for prepping the markets or prepping anyone for anything that was about to happen. Now, the third thing is that we're wired to avoid pain. Studies show that our desire to avoid pain is 2 times stronger than our desire to get a desire, right? A benefit. Because think about our biology and think about evolution. Think about what you're working against here, which has happened for millions of years, right? What should our brain prioritize? I'll give you 2 scenarios. 1, oh, look, there's some new berries. Those might be yummy. Or, wait, it sounds like there's something behind us. Maybe I should turn around and see if there's a lion or something about to eat us before looking for more berries. What do you think you're gonna do? You're gonna turn around first, right? So we are wired to avoid pain, and so we look out for pain. Our consciousness is always looking for it. Humans are just naturally anxious and look for negativity, and just their insecurities are things that they see all the time, right? So we're wired to avoid pain, and so that's something you got to realize. Now, the fourth thing is we want to make things simple, okay? Humans want to make it seem like everything is simple. Things are either good or bad, right? Look at politics. Look at how humanity over time has always had an us versus them mentality. We good, they bad, that's it, right? We easily want to see an answer. We want to make it black or white. That just makes it feel so much better for us. We can sleep better at night when we think this is good, this is bad, that's it. But here's the thing, right? It almost never is. So we give ourselves the answer. We make it up. We pretend that we understand the answer and we know it to be true. The key to being a good investor is realizing that you don't know what you do not know. No matter what, there can always be black swan events, meaning events that you could have never thought of, right? Let's say you are so high conviction on Bitcoin, right? You understand the technology, you understand the space, you understand where things maybe are going economically, financially. But here's the thing, there could always be something that could destroy the value completely. What if Tesla creates a coin? I don't know. What if the UN bans mining? I don't know. What if Satoshi comes out and he's actually Mark Zuckerberg, the lizard man? Guess what? That shit is going down, right? So realize that you do not know everything. No one does. A humble investor is a good one. Now, the more you understand your psychology, the better off you're going to be. Your psychology is not prepared for the modern world. It's not built for it, right? It's built on evolution of millions of years of non-modern world. And the more emotionally intelligent you are, the better investor you can be. And the better investor you can be in your life, in investing in the right relationships, in the right actions, in the right things for your health, right? Because the more you can avoid these knee-jerk reactions and the more you can stay the course on what you believe to be the right path, the more successful you're going to be in the long run. Because remember, investing comes down to two things. We got knowledge, which kind of creates your plan, and then we have emotions, which allows you to act on it and stay the course. So let me know if you like this video. I'd love to hear from you in the comments. Let me know if this has kind of helped you, if you like the psychology of investing, because guys, it's just as important as which stock is maybe undervalued or what's going on in the markets, because your psychology and your emotions are ultimately going to decide the actions you take. Thanks so much for watching, guys. Consider subscribing, and I'll see you next time.